The hidden cost of cash. Got some extra cash, but the stock market sounds like a foreign language? Today, we are cutting through the noise. Here is exactly how you can start investing this year and prevent your savings from losing value. Step 1. Understand the why. Why invest? Because keeping all your money in a normal bank account means you are silently losing to inflation. The Fed targets a 2 to 3% inflation rate every year. Think about it. A few years ago, a Chipotle burrito was $8.50. Today it's closer to $12. To beat this, you need the stock market, which historically returns 8 to 10% a year. If you had invested $100 in the overall market in 1980, it would be worth over $17,000 today. Thanks to compound interest, your money literally makes more money just by sitting there. Step 2. Pick your playground. To buy stocks, you'll need an investment account. You have two main choices: a retirement account, like a 401k or an IRA, which offers great tax advantages, but ties your money up until retirement, or a regular brokerage account. You can open a brokerage account online using apps like Fidelity, Charles Schwab, or Robinhood. And unlike buying real estate, stocks are highly liquid, meaning you can easily cash out whenever you need to. Step 3. What to buy. The secret sauce. Skip picking individual stocks. Sure, you could hit the jackpot with a company like Nvidia, but you could also lose your shirt if you pick one that never recovers, like Intel. The smartest and safest bet for beginners? Index funds and ETFs. When you buy an ETF like Vanguard's S&P 500, ticker symbol VOO, your money is automatically split across the top 500 U.S. companies. It guarantees instant diversification, requires no active management, and carries very low fees. Step 4. Master the strategy. When is the best time to invest? As soon as you have a consistent income. Don't sit around waiting for the market to dip. The S&P 500 spends about 8.3% of its trading days at all-time highs, and missing just the 10 best days in the market could cut your total gains by 54%. Follow financial writer Nick Maguli's golden rule: just keep buying. Use a strategy called dollar cost averaging, which simply means investing a set amount, like $200 every 2 weeks, on a regular schedule. This takes the emotion out of investing and averages out your purchase price over time. Step 5. Execute the trade? Ready to pull the trigger? Open your brokerage app, search for the ticker symbol VOO, and tap trade. You have two main options. You can place a market order to buy immediately at whatever the current price is. Or you can set a limit order to automatically buy only if the price drops to a specific target you set. Choose your order, swipe up to submit, and boom, you are officially an investor. Remember, your strategy should match your age. The younger you are, the more risk you can afford to take. Start making consistent investments, set it, forget it, and let time do the heavy lifting.